In the previous video, the housing market is in trouble again. We mentioned Chinese property market. Now here's a surprising thing. Starting May, a large number of wealthy people began to sell their properties at a loss. Make another addition today. Honestly, you can question the character of the rich, but you mustn't doubt the vision and judgment of the rich. The current convergence of rich people, it's very striking. If you don't pay attention, you can't avoid being harvested. Welcome to C Finance. Please subscribe to this channel in time. Avoid missing out on more exciting content. Recently, there has been a lot of talk about the wealthy. The news of a massive loss-making sell-off of private property. For example, Zhu Rongmao, he chose to sell the property now. It's a very delicate time, because now it's the moment after Hong Kong's withdrawal. The market is back at a falling note again, withdrawing from the Hong Kong property market. And after 2 months of volume and price increases, now it's back down again. After confirming the downward trend, Boss Zhu decisively sold the property at a loss. He bought the property in 2017, competing with Li Ka-shing, and now it has been sold at a price that is 15% lower than in 2017. The loss is not too much, but if he can sell it a year in advance, maybe we can break even. The reason why he dragged it on until now is hope. Can the market rise after the relaxation of Hong Kong policy? Profit, but the market didn't wait to rise, so he decided to stop the loss decisively. Of course, the worst are those who are after the withdrawal of wax. Ordinary people flooding the market in search of affordable housing. They fell victim to a soft landing. So we need to think about a question. In the housing market downward cycle, why are there so many people venture into the market and ended up being the victim of a soft landing? One of the main reasons, it's just that a lot of people are not ignorant of the rich or the experts. Always think that the rich have better judgment than others. So many self-media bloggers claim to have, pretend to be rich, then say something that is not supported by data, but feigning lofty judgment. It can attract those who are easily fooled to take over. As a result, the person who took the order, part of the funds became the seller's cash-out funds. The other part becomes the self-media blogger's commission. So let's talk about demagoguery first. For China's macroeconomy, stock market or property market trends, a lot of people just take it in a probabilistic way, make some degree of prediction, but that doesn't mean there's a lack of awareness. It's because the market itself is very complex. It's subject to a variety of factors. Even those in the media, people who claim to be economists at Peking University or Fudan, the predictions made, looking back at their remarks and market movements in hindsight, the accuracy of discovery may not exceed 50%. The reason for the poor accuracy rate, maybe it's because they're influenced by certain interest groups. It could also be a real misjudgment of the market, but none of that matters. You just need to know the accuracy of their predictions. No, just flip a coin and guess how high the front and back are. This is what I just said about removing the charm. Back to investing. We're still on our own. In the field of investment, simultaneously track data and make decisions. It's often more important than just making the prediction itself. Just like the boss who mentioned earlier, he is also seeing the trend after Hong Kong's policy tightening. After confirmation, make up your mind to stop the loss. Depending on the probability and certainty, track data step by step to confirm and make decisions. It may not be possible to sell at the highest point, but it can be sold at a high level. Property to be sold. For example, it's like driving to a place. Navigation will give you calculate an estimated time of arrival, but that doesn't mean you always arrive on time. But throughout the journey, navigation will be based on the latest road conditions, correct and recalculate the estimated time of arrival in real time. This is similar to our judgment of the general trend. We based on various available data, calculate and predict the general trend, and in the process, we are constantly collecting new market data to correct our expectations. Time to return to Hong Kong to withdraw from law. We can say basically remain bearish, but it is also necessary to observe the effect of wax withdrawal. At this point, actually, no one dares to be 100% sure about the trend of the Hong Kong property market this year. But predictions can't be accurate. Doesn't mean you have to go in and be a chive. Whether you are a buyer or a seller, an observation period is required, rather than being fooled by the media and blindly taking orders. Of course, the reasons for their acceptance are also very clear. For fear of missing the lowest price. However, in the field of investment, there is a natural contradiction between certainty and rate of return. Take the stock market as an example. As can be seen from the chart above, you can buy at the low on the left. You can also buy on the right. But on the left, you can only judge by experience and guesswork. Maybe you can buy the lowest point, but it is also very likely to step on the trap. When the price crosses the 60-day moving average on the right, you can get a sure sign of an increase. But the profit margin of the bottom price may be missed. Corresponding to the property market, the situation is similar. Take the withdrawal of the Hong Kong property market as an example. After the market withdrew, the volume and price rose together. We still insist on the judgment of high probability of decline. But if you are an experienced Hong Kong property market investor, nor can we ignore the tracking data during withdrawal observation to eliminate possible trend reversals. When there is only one choice between yield and certainty, it is recommended to choose certainty. Would rather give up the profit of the bottom price space, because for most people, earn more and less in investing, but never lose money. So back to China's real estate market. New deal on the 517 property market. In the context of the new policy of the Shanghai and Shenzhen property markets, how do we get certainty about the rise and fall of the housing market? We can judge by the following three indicators. The first indicator is new household loans. By observing new household loans in May and June, and compared with the data for the same period from 2015 to 2023, household debt rose sharply in 2016, triggered a housing market boom. In 2022, household debt will decrease significantly. It triggered a sharp decline in the housing market. Between household debt and housing prices, there is a complete positive correlation. Due to the national measures of the 517 property market New Deal City, including lowering down payments and interest rates, and relaxed the restrictions on residents' leverage, we can track subsequent monthly data. Let's take a look at these new initiatives. Does it lead to an increase in new household loans? However, this indicator is a national indicator, so let's talk about metrics at the city level. The second indicator is the growth rate of demand deposits. Demand deposit growth rate. It is usually a leading indicator of property market transactions. We have already mentioned in the previous video. Interested friends can review the property market related videos. This indicator involves observing the year-on-year growth rate of demand deposits and time deposit growth rate, and with the current and time deposit data over the years. Compare. By observing the flow of household deposits, is it going to demand deposits or time deposits? It can determine the likelihood of residents spending in the property market. This data is by province. For example, municipalities directly under the central government such as Beijing and Shanghai, there will be independent data, and Shenzhen's data is counted in Guangdong province. This indicator can be used as a specific leading indicators of urban property market. The third indicator is the landlord confidence index. Mainly observe the daily listing price ratio of increase and decrease to understand the overall mood of the landlord's mood. To a certain extent, it also represents the buyer's emotions. Certainly, volume and other data are also important judgments. You know that. I won't go into details separately. In the field of investment, we need to be based on the latest data, make independent decisions and judgments. Because the world is unpredictable, and many self-media voices, it's all about emotional distractions and noise. It could even be counterproductive. So we need to be objective, rely on data to make decisions. For example, in late April, there are rumors that China's central bank wants to trade government bonds in the secondary market. As a result, almost all self-media is interpreted as China's central bank wants to buy government bonds. You should remember the water release, right? But according to logic, the PBOC's move is likely to be to sell government bonds instead of buying treasury bonds. That is to say, not to put water, but to collect water. Not quantitative easing, but reverse quantitative easing. Just these few days, the Financial Times, which is run by the People's Bank of China, released the news, confirmed that the People's Bank of China will sell government bonds. This validates our judgment based on logic. This example is given to illustrate. In the field of investment, we rely on data and financial logic to make independent decisions. There are few other options, because There are very few opinions in the market that can be fully trusted. What you see, most of it is what other people want you to see. There are interests behind it. After the 517 property market new policy, Shanghai and Shenzhen have relaxed purchase restrictions and cash loans, but the supplementary down payment ratio, it is the 20%, released by the People's Bank of China in August last year, rather than the 517 property market new deal. 15%. We judge based on this situation, the government's intention remains to advance a soft landing. Due to the impact of the new property market policy, short term, there may be an increase in transaction volume and house prices, but just like Hangzhou last year and Hong Kong this year, this short-term warming tends to continue to decline after 2 or 3 months. Therefore, we predict the trend of Beijing, Shanghai and Shenzhen will be similar to that of Hong Kong and Hangzhou. It is recommended that people who are willing to buy a house set an observation period, continuously track changes in data, preferably 2 to 3 months. In the field of investment, we want to avoid price changes due to 1 month's volume. Just rush into the market to take over. We should place more emphasis on certainty, especially for long-term investments like houses. Certification is what matters now. See here, it's time to subscribe to this channel, helping everyone weather difficult economic times and make better decisions for the future.